down. It's been a tough year for banks. You've just been given a 6% return on the Bank Nifty versus the 9% on the Nifty 50. This is year to date. And, within this universe as well, the top gainers, which have significantly outperformed, ICICI, SBI, Federal Bank, those are the ones which have done very, very well. And Can Bank and PNB also outperforming to a certain extent. PNB not so much, but you just have about 4 banks which have outperformed the Nifty Banking Index as well as the Nifty 50. In terms of where you stack up the underperformers, and there are so many as you can see. IndusInd down 41%, IDFC First down 30%, AU Small down 29%. A chunk being taken out of each of those in terms of returns for shareholders. A lot of it to do with the kind of stability that banking business has done in 2024. That's been the first key highlight for me this year. Stable earnings have been rewarded very well. SBI being able to maintain the 1% plus ROA, ICICI Bank being able to maintain 2.3% plus ROA. Just the stability in earnings has really allowed the stocks to fly. The second key highlight for me was the focus has shifted more towards deposit growth. Strong deposit franchise has been able to do better. Loan to deposit ratios being healthy, those banks have done relatively better. ICICI, SBI, both of them doing fairly well on both of those metrics. Where asset quality issues have come towards the fag end of this year, we've started to see that. Again, now the focus has started to shift towards asset quality as we close 2024. So likely a lot of this will get carried into 2025, and those sustaining those kind of numbers with regard to asset quality will likely do better in 2025 as well. Loan growth, well, that's begun to taper towards the fag end of 2024. How much of that gets carried to 2025 is going to hold another key piece with regard to how returns will shape up. So what are currently headwinds, or what are things that we need to watch out for rather in 2025? Will asset quality issues sustain, or will it go off as quickly as they've come in? So likely the current view seems to be it will sustain in 2025, and therefore good banks with good asset quality will get rewarded disproportionately. Loan to deposit ratio likely to shrink. Deposit growth has already picked up pace, loan growth has tapered, and therefore the band in which loan to deposit ratio has been incremental, has definitely shrunk by quite a bit. And that's what's already playing out and will continue to play out in 2025. Can system loan growth sustain? How low will it go? Will it sustain double digit? Will it go lower? Then some of the faster growing banks will start to take precedence, and those ones will be the ones which will do well. Margins, ROA to shrink if the RBI will raise rates. This is something we'll have to really look at, because there'll be some banks where the margins will shrink sharply and quickly. Some banks will be able to hold on to margins. The ones which are able to hold on to margins will hold on to ROAs and will definitely do better. Temporarily, it may be a 2-quarter thing, but nonetheless, that will still impact numbers for 2 quarters. Now, in terms of how the price to book has shaped up, nearly all of these are trading at least a 10% discount. Nearly all. That's how it's playing out. So despite HDFC, ICICI being at those multiples, they're still trading at least a 10% discount to 5-year average, right? And you look at a Kotak at 2.2 times and Axis Bank at 1.7, IndusInd now at 0.9 times. This is all 1 year forward. SBI at 1.4 and Bob at 0.9. And this brings me beautifully to the kind of upside that analysts are seeing on some of these. IndusInd 54%. AU and Axis, these are the other two which are favorites after the outperformance that we've seen from an ICICI. Some of those are largely the favorites. Can Bank, Bob and SBI within the PSU banking space. Federal Bank has done ever so well. 16% seems to be the consensus there as well.